Good morning, everyone. Welcome to the Macro Snapshot. We are November the 4th, 2025, recording this in the morning. Okay, so we're waking up with a bit of a sort of a risk on tone, and I'm not exactly sure. There doesn't seem to be any specific catalyst to that overnight. What I would say is that we've got Palantir's earnings yesterday, which were quite positive, but the valuations are just extremely elevated, and it could be that the market is really starting to understand that most of the so-called sort of good news is priced into the things like the Nasdaq. We've got all the Nvidia sort of good news and sort of Apple, everything like this, and maybe just the valuations at quite elevated levels in the market are saying, okay, we need to now get fresh impetus, fresh inputs to justify these valuations. It could also be, I don't know, just looking up here the ISM we had yesterday. Keep in mind, we're not getting too much data today. For example, we don't get jolts. There's no non-farm payroll. So the market really at this point is starting to feel, I think, a little uneasy just with this idea that, as Powell said the other day, we're driving in the dark and we need to slow down a little bit. So possibly at these elevated levels, for a lot of the valuations, for a lot of these sort of tech companies, there's a lot of concern about sort of, how this sort of capex is going to be funded. We saw, was it Alphabet yesterday, with sort of tens of billions of actually euro-denominated sort of bonds being issued to pay for this capital expenditure and all these outlays. So there's just concerns here about the funding for the capex expenditure. The breadth of the market is very limited, becoming more and more limited, more narrow, and it's maybe just a sort of a profit-taking moment. And if we look here at the ISM manufacturing, sort of a mixed bag. Again, I was just reading something this morning by Bob Elliott, actually, just essentially pointing out that historically, these things are not super accurate. So we have to take this with a grain of salt and not take this as the last word on the economy. Although having said that, with the lack of government data, you need to sort of anchor from something. But if we actually look at the ISM manufacturer yesterday, it came in still in contraction territory. You can see here 48.7. So it was a little bit lower than estimates. You see 49.5 here. So we're still getting this, relatively soft kind of manufacturing data, despite Trump's calls for, sort of onshoring and whatnot. And just interesting to put this in the context, if you look at the breakdown going all the way back to the good old days of 2025, you see that overall, this is all the different sort of subcomponents. You see that overall, we're at this, not horrible levels, not in recession or anything like that, but just a sort of a relatively stagnant sort of manufacturing section. Although one could argue that yesterday and that was the negatives yesterday was for the production and inventories were down a little bit. Although having said that, if you look at the new orders and employment, they were up a little bit, but still relatively sort of low, but just sort of at a stagnant point. So not really bad news, but not great news. Maybe something which is a positive here for the Fed is that the prices paid, which I think I've got here, the prices paid was actually down a little bit, still at elevated levels, but down a little bit. So overall, if we look at the ISM manufacturing, we can say that it's I would say reasonable. It's okay. It's under 50, so technically still in contraction, but new orders ticked up a little bit, prices paid ticked down a little bit, and employment was okay. So that's probably a pretty good picture of the economy at the moment, that it's not booming, it's not busting, it's just sort of okay. Right. So what we will get is a bit more data. We're going to get ADP tomorrow. So that's the private weekly number now for the payrolls. I think the market will probably focus on that quite a lot. And then later in the week, of course, we'll also get the ISM services, which is going to be important, especially for the employment component. The other thing which is quite important, I'm just going to get back to some of the charts here, is we start to have tomorrow at the Supreme Court, Treasury Secretary Bessent will be there. And again, maybe this is where the market is starting to have a little bit of a risk-off tone. Just look at the copper chart here, you see very kind of risk-off. But just this idea that, let me just move a couple of things here on my screens. Yeah, so we have tomorrow the first arguments, what they call the oral arguments at the Supreme Court about the legality of the tariffs. Are these tariffs legal? And the oral arguments are essentially where the justices sort of ask the various parties, obviously the U.S. government, but also the plaintiffs bringing the complaint, essentially, outlining some of the sort of the key questions. So that could give a little bit of direction as to whether the Supreme Court rules that these sort of tariffs are in fact illegal or not. We'll maybe talk about that a bit more tomorrow morning. But essentially, from what I've been, the research I've been doing in articles reading, it seems that one of the issues is that, yes, some of them are illegal in a certain sense that, at the end of the day, the Congress really is the one who's able to, in this context, impose tariffs. And not just the president, but the Congress needs to be consulted and, in fact, to decide on it. But on the other hand, though, there is this sense that there are different ways, like, for example, invoking a 1930s law to redo the tariffs just with a different legal justification. Because the legal justification at the moment, which Trump has used, is that the tariffs are essentially sort of almost like a war situation. It's like the deficit is a national emergency, which requires emergency measures. But there are other ways of doing it more technically. Anyway, we'll talk about that maybe a little bit more tomorrow. But my point is that if the tariffs, sort of stop, who's going to pay back the money? And I was looking yesterday, the tariffs at this point are bringing in about $30 billion a month. So if you annualize that, we're up to about, what, 350, 360 billion. And just in terms of something like the bond market, that's pretty good because at the end of the day, this is not really reducing the deficit, but it's enabling the deficit maybe to stabilize. And therefore, if the deficit stabilizes, potentially, theoretically, less bond issuance on the long end. So that's maybe, at the margin, a positive thing for the bond market. So the point is that if the tariffs are ruled illegal and the government has to pay back all of that money and is no longer getting that income, as I say, about $30-40 billion per month, one could argue that, in terms of the deficit and therefore bond issuance, this is not great. On the other hand, you could argue that if the US government has to suddenly, pay back, so to speak, or reimburse all of these tariffs to importers, you could argue that's a bit of a stimulus. So interesting days. Let's just look at some of the specific markets and what's going on. As I say, general sort of risk-off tone overnight. Let's just look at, for example, the Australian dollar, because we did have the RBA decision last night. So we'll just put up the Aussie. You can see here the Aussie dollar, this on the spot here versus the US. I've got the Bollinger Bands up today. Couldn't really keep above this downtrend. If we just go back a little bit, just to draw that. You see there's quite a strong downtrend here. Couldn't keep above that, and in fact is falling off. And this is interesting. This is probably really sort of a function of the risk-off tone because the RBA last night was unchanged, so no cut. What they did say in the statement was that the inflation, they thought that the inflation, this sort of sticky inflation, was possibly temporary and wouldn't be long lasting. So you could argue that that's potentially sort of a dovish thing. But then on the other hand, you could argue in a slightly more hawkish sense, they did say that for their forecast for 2026 for interest, where they thought the interest rate path would be, back in the last meeting, there were 2 cuts in that forecast. Last night, that had been reduced to 1 cut. So that's a little bit hawkish. But the Australian dollar, as you can see here, are not responding to that at all and actually down. And so essentially now, much more sort of attuned to sort of global tariffs and just this general risk-off tone. If we look at the pound, again, you see the pound here, interesting just from a technical perspective, breaking down below the 61.8% fib retracement. So if we look at that, you see this impulse here, the pound here now breaking right down the extremes of the Bollinger and below the 61.8 sort of retracement and below these recent levels here. So if this continues to break, this could have quite a significant downside here for the sterling. And one of the reasons that there was a press conference, there's going to be the budget released by Chancellor of the Exchequer Reeves. But she was at pains yesterday in a kind of a pre-budget speech, a press conference, just kind of setting the context, essentially saying there could be, she didn't really say it in so many words, but the market has interpreted that as possibly more tax cuts, tax hikes coming, just because they have a fiscal deficit. They have a pretty major sort of fiscal hole. And the Prime Minister this morning, we saw Starmer, he was out with quotes saying the UK won't take risks with excessive borrowing. So really the focus in the United Kingdom at the moment, which obviously has sort of considerations here for the pound, is this idea that there is a fiscal problem. They've been spending too much, and it's going to be difficult to stimulate the economy. If anything, they're going to have to increase taxation. And so sort of a bit of a wet blanket being thrown, even before we have the official budget statement, which I think is coming tomorrow. And you see here that the pound sterling are not liking this sort of, I don't want to say recessionary, but sort of non-stimulative sort of vibe happening in the UK. So the pound sterling down. On the other hand, not too bad for the British bonds, for the gilts, because if there's going to be, more fiscal prudence, maybe a bit more taxation, so less deficit, less need for issuance. So the gilts this morning are actually outperforming the bunds and the US treasuries, but the pound itself under a little bit of pressure here. If we look at a couple of other currencies as well, if we look at the CAD, you can see that USD is up against the Canadian dollar here. And again, if you just look at this Fibonacci thing here, we're just breaking above. We're at the middle of the Bollinger Bands here. We're still in this upward channel. You see, we have this sort of upward channel grinding higher. So it's possible that USD continues to strengthen against the Canadian dollar. And just in terms of the Fibonacci's here, we've broken above the 38%. There's big retracement here going all the way back to where are we? The beginning of February here. We're now above the 38%, pushing up towards the 50%. And it's interesting here that today in Canada, there is the budget release, the budget statement is being released. And it could be a lot of commentators are calling for sort of fiscal stimulus just to try and stimulate the Canadian economy. Obviously, the Canadian economy has been under a lot of pressure with the sort of the trade war and the tariffs in the US and all of that kind of stuff. So there could be some fiscal stimulus sort of coming in the budget, which would actually be a positive for the Canadian dollar. So we could see this under a bit of pressure here. There could be why would it be a positive? Because unlike the UK, or let's say a country like France, there's actually no problems about debt sustainability in Canada. If you look at the Canadian debt situation compared to, let's say, United Kingdom or France, a much healthier sort of situation in terms of debt issuance and whatnot. And so therefore, if we do get some fiscal stimulus today, that could be a net positive for the Canadian dollar and the Canadian economy without raising issues of fiscal of debt sustainability and whatnot. So that could be, it's interesting here, you see the USD CAD at the top of its Bollinger Band. You know, if there are significant fiscal measures to help the Canadian economy announced today, we could get just a little bit of a pause here in USD CAD strength. Other thing to keep in mind is that the Canadian unemployment rate currently is at 7.1, and the government will not like that. We do get those Canadian sort of jobs number, not in the next couple of days, but actually on Friday. So that's also going to be quite important for the Canadian dollar. In terms of the USD itself, if we just sort of throw up here the dollar index, what is interesting, again, it's breaking out to the top of these Bollinger Bands, as you see here at the top of that range, and also keeping a pretty interesting point here because the purple line, as I was saying yesterday, is above the 100. So having a little bit of strength, but this is going to be a little bit of overhead resistance here at the top of the Bollinger Bands and just maybe taking a little bit of a pause. It's difficult to know with the US dollar. I mean, if we look first of all at the like at the Fed and what's going on, we've had sort of a mixed bag. Clearly, there are hawks and doves, and I mean, people in the middle. There's obviously a huge, well, just some divergence in policy sort of outlook at the Fed. Yesterday, we had Lisa Cook and Mary Daly, both of whom were relatively dovish. I mean, we had Daly saying that she has an open mind in terms of the December meeting, and Cook, who is known as a dove, was a little bit more concerned about the employment situation worsening. So, there's a couple of people who are still keeping, let's say, an open mind and that for December as a live meeting. Although if we look at the pricing, it's down to about 16 basis points for the December pricing. So it's gone down significantly, but still the market is, leaning towards possibly a cut. So in terms of the US dollar having more strength, what data? We're getting in a situation where there's not data really to say, oh, hey, the economy is super strong, the unemployment situation is okay, and therefore the Fed definitely won't be cutting in December, despite the hawkish rhetoric from Powell. I saw what Powell said. Some people saying, oh, he's not going to cut. Personally, I think he was just trying to realign the markets, and we can see that with any of the SOFR contracts. If we actually bring up, let's find a SOFR contract, like if you look at, let's say, something like the 2-year here, you can see that clearly what Powell wanted to do. For example, he pushed down the 2-year, now it's just stabilizing. If you look at, do I have any SOFR contracts up here? Yeah. If you look at, let's say, I'll put in, well, this is not perfect, but I'll put in, let's say, June of 2026. You see there was a repricing here by 10 or 12 basis points, which you can see that's about 15 or 16 basis points. So that's going out towards 2026. So my personal view is that Powell wanted to realign the market in general, and it wasn't necessarily him saying absolutely no cuts in December. I think he is relatively honest to say he's data dependent, and it's a 50-50. It's a coin toss. And so getting back to the US dollar, can the US dollar strengthen more? Yes, it can if the data comes in. Can it weaken a little bit? Yeah, it's going to be data dependent. So I think we'll have to see. We have the ADP number tomorrow. Maybe it's going to give a bit of direction. We shall see. In terms of other markets, but as I say, we don't have the JOLTS number, we don't have the employment numbers this Friday, so everything's getting a bit weaker. But in terms of some other stuff going on, I just want to look at some of these equity markets. You can see here the VIX up just a smidgen, but basically global equity. Let's start with the US. You can see it's coming off a little bit. It hit the top of the Bollinger Bands. I think I mentioned a day or two ago that it's if you look at like the monthlies on something like the Nasdaq, it's never actually closed, or very, very rare to close above the monthly Bollinger Bands. And so here we are at the beginning of the month coming back. Again, you can see hit the top of this upward channel as well, the top of the Bollinger Bands as well. So a lot of just technical indicators, overbought, overextended. We all know that. We're all looking at that. And we have a little bit of a gap here. Maybe it's going to sort of fill this gap just is come back down and fill that. So as I say, concern about companies like Palantir trading at a 90 multiple and whatnot, very, very overextended and very sort of exaggerated valuation. So we see here that that coming down, but not only there, but also global equities. And again, just want to look at, for example, look at the breadth of this market. This is, as you can see here, S&P 500 stocks trading, a percentage of them trading above the 50-day average, and you can see it's only like 38%, and it's coming down. So it's really just the Mag 7 which are doing pretty well, and you can see, look at that, even though they're having a bit of a pause at the top. But can look at this compared to something like the equal weights, which we see here. So if you look again, you see the equal weights or percentage of companies trading above the 50-day moving average. It's definitely very clear that it's top 7, 8, 9, 10 of these big tech companies. They're taking all of the flow. And as soon as those valuations are questioned, and the capex and whatnot, that's going to bring down the general indices. But also we can see a little bit of a pause. We talk about just having finally a little bit of a pause in Japan. You can see that's very, very overextended. And one which I was talking to a couple of friends yesterday, and maybe on the video as well, something like the Kospi extremely in South Korea, extremely, just been on this crazy bull run. Now let's keep this all in mind. That it's not like collapsing or anything like that, but it was due for some kind of slowdown. And just kind of interesting that this morning I was just reading some comments from the Minister of Industry in South Korea, and they're going to release some new sort of policy measures, but also sort of financial support measures for the steel industry, which is really under a lot of pressure because of Trump's tariffs. So I just wonder if there's a little bit of once if the semiconductors sort of cool down a little bit and the AI stuff cools down a little bit, maybe something like the Kospi is due for a relatively significant pullback in it, and it could be something like, I don't know, if we throw on a Fibonacci, something pretty basic like this here, just from this sort of up pause here, you can see that there's a long way to go. This guy has run a long way. So even a pullback to the 38% fib here, let's say 3,800 or something, is completely fine and wouldn't even sort of upset the moving averages too much. So and a way to play this, if you think it's just going to sideways consolidate or perhaps come off, selling call spreads on something like the Korean ETF, which is EWY, I believe. Let me just check from South Korea. So EWY, if you look at that, you can see here also very, very overextended, and you can see in the pre-market already down a little bit. Something like selling a call spread would be one way just to sort of play that in terms of just a bit of a slowdown. Just finally, guys, I want to look at a couple of the commodities. We see that oil in this general risk off is just having a bit of a pause here. It's finding it hard to get above that. It's not obviously at the top, just in the middle of its range in the Bollinger Bands, just in a sideways consolidation. And there's just talking about that, we know that OPEC Plus increased production by 137,000 barrels, modest increase at the weekend. And basically for Q1 2026, OPEC Plus have said that they're not going to increase production. And what's coming out of sort of a few rumors and gossips and story is that the Russians, because of the American imposed sanctions, are finding it hard to increase their production. So it's almost as though the Russians apparently said behind the scenes, hey, we can't do any more production, so why don't we just take a pause in general? And OPEC Plus seems to have agreed with that. Again, with this risk-off tone this morning, if you look at something like copper, taking a big dump this morning, falling down below the Bollinger Bands. You can see here this sort of retrace falling down below the Bollinger Band. So that's starting to look a little bit negative. As I say, no specific catalyst this morning. Falling down below the Fibonacci retrace at 61 percent. So if it can't hold here, you've got to say that maybe copper wants to test a bit more to the downside. Silver also down a little bit. Gold essentially treading water, just sideways, not doing too much, waiting for a little bit of sort of news here. And also probably waiting a little bit for the US dollar, because the US dollar has strengthened over the last week or two. Let's see if the US dollar can maintain its strength. If the US dollar cannot maintain its strength and weakens, who knows, that could be the catalyst for a little bit of a gold to resume its push higher, so to speak. Because it's had, a fairly nice retracement here. If you look at some of these fib levels, depending, where you measure it from, either, the shorter term or the longer term ones, we are now at levels which would be consistent with, potentially some dip buyers coming in if they believe the US dollar is weakening and the other factors. Okay, guys, I'm going to leave it there. That's about it for today. As I say, tomorrow we'll talk a little bit more about the Supreme Court decision on the tariffs. And that's it. Also interesting to see if the risk-off tone continues throughout the day on the equities. Thanks very much. Have a great trading day, and we'll see you all tomorrow. Thank you.